It's all deja vu again for the crypto market. The cryptocurrency market encountered a situation that was all too familiar, as virtually all the value of another stablecoin was wiped out in a matter of hours. The native stablecoin of the Polkadot-based decentralized finance platform Acala, the Acala dollar, lost all its parity, plummeted 99%, and is now worth some fractions of a penny. So what does this mean for the crypto market? And what made Acala fall? Welcome back to Bitcoin Broadcast, one of the best channels for the latest trending cryptocurrency news. If you seek to be updated on what is currently happening in and out of the crypto world, this is the place to be. So how about you first give this video a thumbs up and you hit that subscribe button for more crypto related news. And without further ado, let's get started. You might be wondering, what was the cause of Acala falling? This time though, the sudden drop can be traced back to a cyber attack. After malicious actors generated 1.28 billion AUSD tokens by exploiting a loophole in the recently rolled out liquidity pool of the network, there was a significant selling pressure on the cryptocurrency. But we can all relate, right? The historic depegging of the stablecoin issued by the Terra Foundation, which wiped out roughly $30 billion from investors' wallets in a span of just 100 hours, is not an old fable for those who have invested in cryptocurrencies. According to many sources in the media, the vulnerability was caused by an improper configuration of the IBTC/AUSD liquidity pool shortly after it went live on Sunday. This explanation is supported by developers working with Acala. Liquidity pools are digital hoards of Bitcoin that are protected by smart contracts and are used to make decentralized exchanges and decentralized financial protocols transactions go through more quickly. After becoming aware of the security flaw, the Acala team promptly fixed it by disabling the transfer functionality of the erroneously created AUSD that remained on the Acala Parachain. But wait a minute, what is a Parachain? Well, it refers to bespoke project-specific blockchains that are integrated into the Polkadot and Kusama networks. These chains are adaptable to a broad variety of use cases and may be connected to those networks. According to research conducted by industry analysts, the DeFi ecosystem must place a greater emphasis on safety than yields in order to ensure the broad acceptance of DeFi products. According to Sharat Chandra, Research and Strategy Vice President at EarthID, recent breaches, code flaws, and cross-chain bridge attacks have only served to damage the narrative of decentralized finance. Acala, which was supposed to be the DeFi center for Polkadot, was unable to withstand the risks posed by an improperly structured liquidity pool. These lapses in security will only serve to bolster the decentralization fantasy. Although Acala is the 2,840th largest cryptocurrency coin, CoinMarketCap was unable to estimate either its market capitalization or its availability supply. Its volume shrank by 99%, falling to slightly more than $3 million, and its supply is no longer available. Although it wasn't possible to identify the exact amount of wealth that was lost, some users on Twitter estimated that it may be as much as $10 million. This estimate doesn't take into account the value of the US dollar has decreased. And even while this amount is very little when compared to the DeFi sector, it is possible that the losses were significantly bigger. Moreover, the way in which it affects people's already dwindling confidence in stablecoins may have a long-term impact on the viability of the technology. Basically, the price fell from the threshold of $1.03 to $0.009 when more tokens were introduced into the market. Because of the promptness with which decisions were taken, the Acala network, its community, and the value of its stablecoin are now well on their way to making a full recovery. This scenario has illuminated for both of us the positives and the negatives associated with the use of decentralized financial systems. For when it comes to online assets that are worth billions of dollars, all it takes is for one individual anywhere on the globe to notice a small mistake for all of the money to be removed from accounts. Because people are responsible for writing both smart contracts and computer code, this leaves both fields open to the possibility of inaccuracy. After they had stopped trading in and out of the LP, the Acala team continued to monitor activities on the chain in order to locate the wallet to which the erroneously issued AUSD had been sent. This action was taken as part of an effort to strengthen the Acala ecosystem. The community that exercises its own form of self-government came to an agreement in order to preserve the value of the investment. The group proposed that the AUSD that had been produced by the hackers to be burnt. This governance vote was supported by the community, and as a result, 1,292,860,248 tokens that were produced in error have been sent back to the source and destroyed. Nevertheless, the developers behind Acala are hard at work correcting the minting error and restoring the USD peg. But the question is, will the crypto investors have trust in the coin again? Luckily, the majority of Monday's price declines in cryptocurrency were less than 6%. Indicating that they weren't very severe. However, in contrast to the downward trend, Chilis and Stepen both had a positive growth of 13% and 10% respectively. On the other hand, Bitcoin prices have fallen to the level of $22,000 after briefly trading above $25,000 over the weekend. Ether, the primary cryptocurrency of the Ethereum network, reached its highest price in 3 months, over $2,000, before settling back down to about $1,700. There are still valid concerns, and the community will want to see that Acala takes additional precautions to ensure that an incident of similar nature will not take place again. The swift management of the situation, on the other hand, has contributed to helping restore faith in the leadership of Acala. The fact that Acala appears to have resolved the issue in fewer than 48 hours is encouraging for the network's prospects moving forward. Furthermore, it gives DeFi and stablecoins the happy ending they so desperately needed after the Luna and Celsius crises that rocked the industry earlier this year. Despite this, there are still some problems. Concerns have been raised over the safety and protection measures taken by the Polkadot network. In addition, the issue of precisely what genuine decentralization involves has reared its head once more recently. If Acala can stop asset trades and transfers, does this mean that their network is totally disturbed? We also have USDD. Critics on Twitter speculate that it might be the next one to crash. However, Tron DAO is steadfast in its use of excessive collateral. It also brags about having more digital assets as collateral than rival decentralized stablecoin DAI. But will all this be sufficient to prevent a death spiral catastrophe? If you're keen enough, you'll notice the resemblance between the mechanisms of the UST and USDD. To promote participation, it even provides large staking yields, up to 30%, exactly like UST did. But even though USDD boasts collateralization by a variety of assets, such a situation might lead to an excessive minting of TRX, which would be the lower price. Like what happened to Luna, we'll just have to wait and see. Nevertheless, it seems as though we shouldn't be trusting these stable coins. Lately, hedge funds are also shorting Tether. If Tether crashes, it'll result in a catastrophe for the entire crypto market. So where are we safe? Which stablecoin should we trust? And on the other side, what do you think of Acala's situation? Will it be able to recover? Comment below, let's interact. Also, please leave a like and subscribe, and don't forget to turn on the notification bell for more amazing cryptocurrency news.